So TSLA, very important. Okay. I'm going to write this down. I have said this previously to you. Market environment is much more important than any individual setup. Why am I saying that? Well, it's due to the fact that, there is this old saying that everyone is a genius in a bull market. Why do they say that? That's because when things go up, people think that they are some kind of god, right? And what ends up happening is people don't realize it's just the environment. Now, identification of what kind of environment you're in is probably the most important thing in trading, and it is the least talked about. How do you identify environment? Let's see if I can go to a blank screen. Okay, so the way to identify environment, or at least the way I do, is I look at my internal data, my internals. I look at breadth, percent of stocks over 50 day, 200 day. That in the S&P. That gives me a good sense for what's going on. Oops. And after that, I see the sectors. I run through all the sectors. What's strong and what's weak. After that, I go down to my scans, my scans, and I say, okay, on the bull side, on bull/bear side, what industry groups are strong and weak? After that, I say, what observations, right? What is my sum of the evidence? Right? What groups? What sectors? What's going on with breadth? What does it all mean, right? You have to take a lot of data, and synthesize it. Hopefully I spell that right. That looks wrong, but whatever. Synthesize. Yeah, and you have to synthesize it, right? So you take in a lot of data, synthesize it down into a trade. That's what we got to do in the end, right? That's our job, to synthesize it down into a trade. Trade entry, stop, targets. That's our job. That's what we have to do. This is the information that I take in, and then that filters into my trading. Okay, so now what we have to do then is say, let me go back here in Tesla, right? What is the environment? Well, what sectors were strong? We were seeing quantum. We were seeing, stuff like that. The hydrogen, lithium, sectors doing well. Lithium stocks. What does that say about the market? We were also seeing breadth form a series of lower highs and lower lows. Please keep that in mind too. So we're seeing weakening breadth, and what is really the most speculative stuff, like again, quantum, hydrogen, all these things, most speculative things starting to get bids. That's what we saw at that point. While that was happening, what setup did we have in Tesla? This is so important, like much more important than any individual setup. Everyone gets so amped about, where's that like next hot trade. You have to think about the why, right? The why is what will help you to actually build out a process. The why is everything. And here, right, once we have that as the overall environment, we should be thinking, okay, this is a little bit more speculative of an environment. What technical setup did we have? We had sharp down, right? Bull triangle, consolidation that took a long time to play out. We have the RS, now firm up for several bars in a row. So that's your setup. Go to the daily. This day on 9/11 is when it triggered long. Keep that in mind. let me show you one of the quantum names, RGTI. What was happening in RGTI? For all of you who remember that, RGTI, again, a highly speculative name, was doing the same compression. Again, stocks that are behaving the same way, that are doing the same thing. This is so important. Look at when this moved. 9/12, the day after. But but look at the pattern. Again, what I said earlier is important. Many stocks doing the same thing. This is another example of a stock that is compressing. Now, again, market environment supersedes the setup. Market environment is a little bit more speculative, correct? I mean, these have been doing well up and through 2025. They've been pretty solid overall off of this bottom. They've been doing great. And they are both compressing, both TSLA and RGTI. There were others as well, but just to keep this simple. So you have, again, a narrowing in breadth. You have sectors that are leading, that are starting to act better, like hydrogen, like quantum, like lithium. Those are starting to do better. And you saw the industry groups also, linked to those starting to act a little bit better. And most importantly, again, filter that into the sum of the evidence. You saw coils forming. That's why I said it last week in Market Week. Coils are the most important thing to understand because that's where the largest moves come out of those setups. Coils in both TSLA and RGTI, among others. This one triggered on 9/12. Tesla triggered on 9/11. Okay, so that's why that worked to the magnitude that it did. How about this one? On social media, this was the most highlighted setup I saw, is this base. Now, what is going on with some of the evidence now? We're still seeing narrowing breadth. We have now rallied a lot more. What happened with RGTI? What happened with that sentiment, right? That sentiment changed. We got a big move down that has since reset the stock. We're not in this anymore, right? We have seen a correction and may now see more consolidation. So it's a very different environment. So why didn't this play out? You had a close over the 78.6, check that box. You had a base, check that box. We go back to the same premise that I highlighted earlier. Market environment is much more important than an individual setup. That is what should be plastered to your screen, on a note card, on your monitor, whatever. That is what it's all about. Identification of the environment. If you are in personally a very choppy period and you are trading a lot, you have not properly identified the environment and you are unnecessarily giving up gains in your P&L. If you're trading less because you have identified the chop, that's what you should be doing. In that same vein, this setup, yes, was bullish, but the environment had changed, right? High beta, more speculative names had come in. So that's why this didn't immediately follow through here and just go up. That's what should have happened, quote unquote. That's what should have happened. This should have just cleared and just ran. But it didn't. It looked at it and it turned down. So you can guarantee that people are getting stopped out as we flush through some of these equal lows here. I don't know what happens here moving forward, but this is really important because so always trying to see where can you get in, where you can have increased sizing, number one. Number two, a highly probable path forward. Number three, where you can have a level of asymmetry in terms of your bets, where you are, again, risking small to make bigger. How do you do that? And how can you track that, whether or not you're actually doing that? That all happens through journaling. you have to track the ones that you did increase size on and ask, did you really get paid for taking that added size? What is your overall win rate on those moments when you do add size? If it isn't really lining up, you aren't seeing average higher win rates and much larger average wins and average losses, we need to do a little bit more work to really identify, how can I hit these harder? How can I get these right? Right? And from what I've seen and in my own training over the years, this is what it's all about. Market environment, identification of the market environment, understanding what groups are acting well, what groups are not acting well, and what kind of setups I'm seeing in those groups. Are they all showing up the same way or not? Okay. If they're not, so some of these things, you can just like hear me say it, and it may only actually click later, but just use this as some food for thought, because once it clicks, there will be, I guarantee you, a light bulb moment for you where you'll say, that's what he was talking about. Because there was for me, that there is for other folks who also follow this same process. Just have this be a little seed or food for thought, and at some point during your journey, it will click. If it isn't clicking right this second, it will click, and when it clicks, you'll say, oh my god, that's it, and I just got to hone in on that, and that's what I need. That's that little tweak that I need to my process to radically change the overall curve of my P&L, overall shape of my P&L. Because guess what it's going to do? If this is your bell curve of P&L, right? You have, and this is 0. So you have lots of, this is 0. So you have, lots of, scratches, whatever, like that. Oops, is this working? Anyway, that's 0. For some reason, I'm not able to actually type 0. Oh, it just went away. Let's do it again. This is your normal distribution curve. Ideally, you're slightly skewed right? Because this is the 0 line. You want your like mean to be slightly to the right. How do we get fat tails on the right? It's with this. It's with working on identifying the environment well, so that way you can size only at those really high probability opportunities. And what it'll also do is it will decrease the number of losers that you have. It'll bring that, because you'll be trading fewer of the lower quality setups. So that will shift your mean, your average, to the right. Again, if you are a numbers person, this should be clicking. If not, maybe it's not. But I find it to be very helpful. Right, shifting that mean in your P&L to the right. The way to do that is all about identifying the environment, because in certain environments, some setups will work really well. In other environments, it won't. But it's all about that, and knowing when your setups are in vogue versus when they're not in vogue. And when they're not in vogue, drop your size, do a lot less, and just really, still do all of our, usual work day in, day out, but do less trading and more watching and improving of some aspect of what you do. That's what I like to do when things are slow. So I hope that was helpful. I think it's very important. Again, even if you may not have found that super helpful right this second, at some point, I think it will click. It did for me. I hope it does for you. 11.7 to 11.18 is when that low is due. Again, choppy. We have not cleared that high. What would we be looking for? You need to see more signs of speculation come back into the market. Higher beta needs to come back. Higher beta has taken a bit of a pause here. So that is why this setup did not play out the way it could have.